Well, it is earnings season. Yesterday, we told you all about the expectations from the IT sector, and today it is all about FMCG. It is time for a special segment, Quarter Se Quarter Tak, where we bring you expectations sector by sector on a daily basis. And today we've got Mangalam now, who's moved over to the wall to talk about what perhaps the FMCG universe could deliver in the December quarter. Mangalam.
Well, as far as the December quarter is concerned, usually seasonally the strongest quarter for the consumer sector. And if you just take a look at the way the consumer stocks have been, there has been stark divergence. The K-shaped recovery that everyone's been talking about, right? Titan up 50%, Tata Consumer up 45%, ITC, Nestle up 38 odd percent. They've been outperformers in the space, largely because of their urban focus. We've seen decent gains come by for the likes of GCPL, etc., on account of the inorganic foray that they made with, Park Avenue as well. So if you look at that part of the market, that's doing well. But now if you move to the rural-focused, more staples kind of market, that hasn't done well. HUL is down 1.5% in the last 12 months. Colgate up just 2%. So we have underperformers and outperformers. So what is it that we're expecting in the third quarter? One, gradual recovery owing to the festive season. So that's something that everyone will be watching out for. The second thing is mid-single digit volume growth for the entire FMCG pack. The third thing that you'll be watching out for, of course, will be, how urban and discretionary consumption continues to thrive and rural continues to lag, and there has been a problem in the mass market staples business itself. And finally, just keep an eye on a couple of other things as well. Price correction post commodity prices cooling off would weigh on the revenue reportage of all these companies. And finally, we'll watch out for gross margins expansion, but at the same time, regional competition has come up as well, and as a result of which ad spends have been ramped up. What are the updates telling you so far? Titan, 23% jump in their jewelry biz. Again, that's telling you the discretionary demand is doing a lot better. Avenue Supermarts saw a 17% jump in their standalone revenue, but a lot lower than their 4-year average itself. Again, mass consumption under a wee bit of pressure. We've had mid to high single-digit growth come in for Dabur. For both GCPL as well as Marico, the revenue decline will be in low single digits as well, for different reasons, but nevertheless, decline is what we're seeing in the top line. What is the street working with? Asian Paints, 7 to 8% revenue growth. Nestle, 10 to 12%, likely to be an outperformer there. Tata Consumer as well, 7 to 8%. So most of these companies will have mid to high single-digit sort of revenue growth, but the EBITDA growth will be a lot higher. Even then, for HUL, it'll be middling at around 5 to 6%. What are the important things to watch out for apart from the numbers? You have to watch out for a couple of these likely outperformers. United Breweries, the management joined us, said that margin expansion, volume uptick is likely. Honasa Consumer, margin uptick is likely. Trent has been doing well. And Jyoti Labs, for the last 3 or 4 quarters, it has been outperforming the industry. So these are a bunch of stocks that will be likely outperformers. And apart from that, management commentary on demand revival, regional competition, M&A activity, and margin expansion will be crucial. Valuations never been cheap in the FMCG space, but now they look relatively better given the run-up that we've seen in the other packs. But then ahead of elections, how does demand pan out, and rural recovery is key to watch out for.
Okay, all right, Mangalam, thank you very much. You come on over and join us in the conversation.